Ladies and gentlemen, good day and welcome to the Vilas Transcore Ltd FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today the management team of Vilas Transcore Ltd, Mr. Nilesh Patel, Chairman and Managing Director, who will represent Vilas Transcore Ltd on the call. The management will be sharing the key operating and financial highlights for the full year ended March 31st, 2024, followed by a question and answer session. Please note that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance are available on the website of the stock exchange and company's investors section. Trust you have been able to go through the same. I now hand the conference over to Mr. Nilesh Patel. Thank you, and over to you, sir.
Good afternoon, everyone. My name is Nilesh Patel, and before we start, I sincerely apologize for any inconvenience caused by the rescheduling of our earnings conference call from Tuesday to today. Unfortunately, my flight to China got delayed by 3 hours, which necessitated the postponement. Additionally, due to exchange regulations required a 2 days advance announcement, we were constrained to reschedule the call to Friday. Thank you for your patience and understanding. And now let's begin our very first earnings call following our successful listing. We hope you had an opportunity to review our investor presentations uploaded on the stock exchange. Today we will be sharing key operational and financial highlights for the year ending March 31st, 2024. Since this is our inaugural call, some of you might be learning about our company for the first time. We would like to take this opportunity to introduce you to our business model. Incorporated in 2006, Vilas Transcore Ltd is a manufacturer and supplier of power transmission and distribution components, primarily serving transformers and other power equipment manufacturers in India and abroad. We produce a wide range of cold rolled grain-oriented electrical lamination, CRGO lamination cores, CRGO slit culls, CRGO stacked assembled cores, CRGO wound cores, and CRGO toroidal cores. These components are the heart of the transformer and are crucial for the efficient functioning of power and distribution transformers, current transformers, and potential transformers. Transformer cores are made from silicon steel, seek to minimize the current losses, and CRGO steel is used to minimize core losses, providing a low reluctance path for electromagnetic flux and supporting the primary and secondary winding of transformers. The cores are installed to reduce this current to a minimum, ensuring efficient energy transfer between the primary and secondary coils. Our design and manufacturing process prioritize manufacturing efficiency, functional reliability, longer service life, and economic viability, using appropriate materials and precision process. We currently operate from 2 ISO 9001:2015 certified manufacturing facilities located in Paur, near Vadodara, Gujarat, with total capacity of 12,000 metric ton per annum. Our plant configuration allows us to produce the CRGO lamination and CRGO core based on the different requirements of our customer pertaining to the dimensions, size, and material requirements. Both our manufacturing facilities are equipped with the latest machineries. We have, over the years, establishing long-standing relationships with several well-known Indian and global transformer manufacturers. Our major customers include companies like Volten Transformers Limited, Electrotherms India Limited, Atlas Transformers India Limited, Silchar Technologies Limited. We strive to maintain the quality standards and requirements specified by our customers for the quality of our products. As you all know, recently we have raised approximately 95 crores through IPO for the expansion plan. These funds will be used for construction of new factory building and for acquiring and installing additional plant and machinery. After the completion of CapEx, our plant's capacity will grow from 12,000 metric ton per annum to 36,000 metric ton per annum, 3 times of current capacity. We are expecting to complete this expansion plan by the end of Q3, financial year 24-25. With that, we are also planning to add new products to our portfolio, starting with like radiators to be used in transformers, which will also be covered in the new facility coming up. Expansion of capacity was very strategic plan because currently we are getting extra orders which are not able to fulfill due to capacity constraint. So these extra orders will be fulfilled with our newer capacity, and addition of new product line will help us to achieve our long-term vision of becoming a hub of transformer ancillary components. Looking at the industry growth drivers, this is one of the best sectors to be in as the demand is rising due to multiple factors. Talking about domestic factors, aging infrastructure is overdue for upgradation, presenting significant opportunities for our product. High growth sectors such as technology, data centers, EV charging networks, and renewable energy are expanding rapidly, increasing the demand of modern transformers. Additionally, the Indian Railways shift to high-speed trains and new projects like freight corridor and metros are fueling demand of transformers from 66 kV to 133 kV grid. With extreme weather and security concern driving the need of robust and reliable solutions. Internationally, India is becoming the preferred supplier of transformers for the US and European markets, especially with ongoing Ukraine-Russia tensions. Global supply chain disruption exacerbated by these tensions highlight the need for resilient and diversified supply source, which are well positioning to provide. These domestic and international factors will collectively drive strong demand for our products, positioning us for the future growth. Now I will begin with sharing key financial numbers and operational highlights for the year ended March 31st, 2024. The total income for financial year 24 stood as rupees 314 crores, up by 10% year-on-year, which with the EBITDA of at the rupees 35 crores, up by 10% year-on-year, and the PAT stood at rupees 23 crores, up by 14% year-on-year. Our 3-year CAGR for revenue is at 33% and PAT is at 64%. And we have healthy return ratio with our ROE at 17.5% and ROC at 22% in financial year 24 with almost zero debt. On the operational front, we are operating at full capacity with capacity utilization of more than 90%. The IPO proceeds will further help us to strengthen our top line by about 35% in the coming year. The growth trajectory in subsequent years are also expected to be robust as we optimize the capacity utilization as well as add more product offering. With this, I would like to conclude my opening remarks. Thank you all, and now I request the moderator to open the floor for the questions and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Priyank Chedda from Valum Capital. Please go ahead.
Hi, sir. Thanks for explaining your business model and congratulations for the public listing. My question is, so our more than 80-85% of the revenue comes from a product which is lamination, right? And we do the lamination of the CRG or steel coil. Now, the question is essentially what is the true moat in this business which is leading to not other players focusing and investing in this product, which is the heart of a transformer, and which is where we feel that our market share will grow magnifold. This is my first question.
So, thing is, there are lots of players who are in this field. So it is not that nobody is investing, but the thing is, our Indian market is growing. See, transformer demand is almost at the peak in this, is going to be peak for the next 10 years, as we are doing lots of renewable energy and everything. So demand of transformer will increase the demand of CRGO, and to cater that demand, we are expanding this. We are sure that this, if you see last long, so many years data, the CRGO demand is increasing 13% every year. And since last one year or 2 years, it is increasing more. So, there are a player, but, I don't know why people are not investing, but we see the growth. We are getting lots of inquiries, which we are not able to cater, and that's why we decided to put up a state-of-the-art facility on which we can provide Indian market as well as we can export also.
Right. So essentially, what is the technology requirement in this business which leads to Vilas being a key player, say, in next 3-4 years after your capacity expands, you become 50% of the market. So what is the key technology which becomes a very key entry barrier for other players?
One minute. How much percent of the market you say?
You said, so in your presentation, it's written that your current market share is 4%. Post your expansion of the capacity, you will become almost 50% of the market share, right? I mean, I'm not sure if I have read this data correct. So what I'm asking is, if you are becoming a very substantial player in this market, what is the key technology moat or the barrier that you have, which other players might find it difficult?
So the first thing is that the percentage of the market has to correct it. We are right now operating at a 4% of the Indian market, and with this expansion, and if we do it threefold of our capacity, then also it will reach to a 10% because Indian market will grow. So even if we'll do 36,000 metric ton, we will be around 8, 10 or 12%, somewhere around that. The key thing is that right now India is lagging of the CNC machines, which we are right now procuring for this expansion. Automatic CNC machine, which builds the core itself. Right now, we supply the lamination, then we will increase the core, assembled core supply, which is automatic, and the machinery which we are buying, which will build the core automatically. So that is a one step ahead, which none of the Indian manufacturer have till now. That machine we are procuring, and this is the one addition we are doing. As well as the contract with the mill, we are getting more and more allocation what we require. Again, in CRGO, there is a short supply in India, and we are getting from the mill. So lots of relations with the supplier as well as with the customer will increase our share in the market. And this state-of-the-art facility, what we have put.
Perfect. My next question is, sir, with what lag time period we are passing on the commodity cost to our clients? What we understand is CRGO steel coil is your key raw material. So what is the time lag to pass on the commodity fluctuations? And second question within this is, why we import 30% of our raw material when, whole of the steel industry is established in the domestic market. So is there any specialty steel which we require to import and not available in India?
Yeah, this CRGO steel itself is not available in India. There are only 2 manufacturers which are having a capacity constraint. So it has to import, and let's say if we say 3 lakh ton of CRGO is used in India, then around 50 plus around 1,10,000 tons is produced in India, and 1,80,000 tons comes out from outside of India. The import has to be a compulsory.
And what is the time lag to pass on these commodity fluctuations?
Yeah. So we have a marketing model like we get order every day, we get inquiries every day, and we quotes every day. So 25 to 30% or 40% is selling like a contract of 3 months, and balance 60% we sell on day-to-day marketing basis. So while anything goes plus or minus, that is covered in this day-to-day marketing, and when there is a contract which is 30 to 40% of our sale, we are not able to pass on, or when, but it gets benefit and loss is neutralized during the period of a year or say maybe 2 years. If price commodity goes up, and if we are pre-contracted, our purchase also pre-contracted. Like we import the material. When we book the material comes to our factory within 3 months or 4 months. So we know what is our cost going to be after 3 months or 4 months.
So if I understood correctly... Sorry, sir. Continue.
If price goes up, see, any commodity price goes up, we came to know before 3 or 4 months before. Because right now I'm buying material which I will use after 3 months. So what will be my raw material cost after 3 months, that I came to know today, so I can accommodate that in next 3 months of my sales in India.
Correct. So what I've understood is your 40% of the sales is B2B and 60% of the sales is spot on a spot contracts, and hence you can relatively predict what can be the spot contract prices that you will sell in next 3 months because you have procured it today. Is this understanding correct?
Yeah. Like if we see that the prices is going to be on upper side after 3 months, we start increasing our price from today onwards. Slowly. Because this is how this entire Indian market operates.
Correct. But now, sir, in this scenario where commodity deflation is there in steel, right? Or maybe very relatively stable. So in a deflationary scenario where your import prices would be higher 3 months ago and spot prices of commodity steel are lower, there may be other players who would be selling at lower price. So how would you, play this situation?
No, the point is that this is not listed commodity. So it's not that it's going to be a down or up immediately. But like if after 3 months the price is gone down, but my stock price, whatever it is right now, is on the higher side. So it's with everybody. Nobody is going to sell it at the lower cost.
Got it. And my third question is, sir, in FY22 you sold around 10,000 tons of your volume. In FY24 you still managed to sell around 11,000 tons, but your realization per ton has significantly changed from 230 rupees to 284 rupees now per kilo, or 2.3 lakh per ton to 2.8 lakh per ton now. So what has changed in this? Is this a commodity upcycle which is placing out over here, or is there a change in the product mix? Are you selling it to a very larger specialty transformers or something like that? How does the product mix, really play important role in your realization?
See, that there might be some, there was some price rise also. But the secondary thing is that sometimes it happens that we have a different grades. Starting from our sales cost starts from 220 rupees to 330 rupees or 340 rupees. So sometimes it happens that the high grade material has a more demand. We sell that more and our content remains the same and figure goes up. Sometimes it happens that in market, some kind of transformers order is there where they want average grade demand of the material, and we sell that, and we sell material as per the market demand. You understand? So when there is a high grade of order we are getting, our sales price, our turnover goes up with the same quantity. Realization value is more because there is a variation in the sales price as per the grades.
Perfect. So over the last 2 years, you have been selling higher grades of the same CRGO laminations, right? So yeah, I understood that.
Because if you see there is BEE guideline, in which they are reducing transformer losses day by day. So transformer manufacturer has to use the higher grade material.
Got it. My last question is, sir, what is the current order book? And given your capacity expansion would come in the year end, what gives you your visibility of 30-40% growth in the current year while you are already running at 90% utilization?
So in this financial year, in this last 3 months, sorry, I don't agree. But in this financial year, what we are planning is that in last quarter of this financial year, we are expecting to operate from the new plant, and we want to capitalize that last quarter of this year from the new plant and generate some revenue from that. As well as we are trying to achieve this 10% remaining in our old plant. We have done some changes, and as per that, we are working right now.
Right. So
and we are confident the new plant will be operational by the January for sure.
Correct. So you would get 3 months of the new plant revenue coming up. The current capacity of 12,000 tons is the capacity which is after the debottlenecking which you have done in the current plant, or is there an increase in the capacity to produce CRGO laminates?
In current plant, we have added one more machine for the MO4 core, and we have got the good order for that, which the commercial production will start from the 10th of next month. So that particular product will add some contribution to the current plant also.
So what leads for us as a installed capacity currently after the new machine that you added?
No, this is a totally different product, not the CRGO lamination product. It's a MO4 core. So we are expecting around 30 to 40 tons per month sale from that, which will start from the next month.
And it has a similar realization mix like of CRGO laminates?
Yeah, it's around 200-230 rupees a kg.
Okay. Okay. So to summarize, you have 10% additional utilization mix that is pending, and you have added one more line of 30-40 tons per month for this year as far as growth template goes, and then you have a last 3 months of new plant coming up, correct?
Okay.
And in what time should we expect the complete ramp up of the utilization happening of the new plant?
Plant will be we will start from this, January, and by the time March comes, it will be completely set up. And then in next financial year, we will definitely have the benefit of that.
Okay. Okay. And sir, you did not tell us what is the current order book that you have?
In current order book, like we have a contract from one of the major companies of 2,000 metric tons. Then day-to-day order booking is full for the 1.5 or 2 months. So current order book must be somewhere around 80 to 90 crores.
Okay. Okay. And if I'm allowed one more question, what is the cost of your material that goes into 1 megawatt of a transformer capacity in case someone has to install a 1 megawatt of electricity generation, and in that there is, say, X number of transformers that are there. How much of your product is a percentage of a total 1 megawatt of energy generation?
Sir, that all depends on the design of the transformer. It varies in huge range.
Okay. Okay.
But roughly, you can calculate that the 1 megawatt is 1 metric ton. So it may range from 230,000 to 350,000.
230,000 to 360,000 per ton of your laminate that would be required, correct?
Yeah.
Got it. Got it. Very clear. Thank you, and thanks a lot for answering all the questions.
Thank you. Thank you. Yeah.
Thank you. Ladies and gentlemen, in order that the management is able to address questions from all participants in the queue, we request you to please restrict your questions to 2 questions per participant. You may rejoin the queue for follow-up questions. We have the next question from the line of Vijay Rawat from Vedant Capital. Please go ahead. Vedant Rawat, the line for you has been unmuted. Please go ahead with your question.
Can you hear me? Hello?
Yes, you are audible, sir.
Yeah. Sir, good afternoon. You said you are starting with the new items, that is radiators. So wanted to know what would be the margin in radiators?
Sir, it will be similar as the margin is similar like the CRGOs, slightly higher than CRGO because it's some technological product. And whatever the percentage we are getting in CRGO, must be around 3 to 4% more than the CRGO business. But the volume will be less.
Okay, okay. And you also said like you would be started to increasing the capacity for core assembly, right? So what would be the margin in core assembly?
Sir, this core assembly we are targeting for the export business because in export there is a labor cost more to assemble the cores and everything. So this will increase our margin by 2 to 3% if we supply this assembled core.
Okay, okay. So my last question is, if you ramp up the capacities for radiator and this core assembly, like by what time these two products can reach, a sizable like 20-25% of total revenue?
Total revenue to 20 to 25%. So for radiator, it will take mainly 2 years to reach to the peak because it's a technical product and it will take little bit long term for the export establishment. So radiator to reach 25%, but I don't think it is possible because CRGO will be the main criteria. Radiator we will reach to certain level, but not the 25% of the total margin. But yes, in assemble core and radiator all together, we can reach to 15% max.
Okay, sir. Okay. I will join back the queue, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Ishita Lodha from Swan Investment Managers. Please go ahead.
Hi, sir. Congratulations for the IPO. I'm not very clear on the pricing mechanism. Can you explain, like, if it is the escalation is passed on to the customer or do we bear it?
Ishita ji, you have to speak little bit loudly. I am in China, so phone call is little bit, the voice is less. Can you speak little bit loudly?
Sure. Am I audible now?
Yeah. Now you are audible.
Yeah. I'm not very clear on the pricing mechanism. Is the raw material cost being passed on to the customer or do we bear it? How does it work?
So all plus and minus has to be passed to the customer. Sometimes we are not able to pass the minus, sometimes we are not able to pass the plus also if it is a contracted. But mainly most of the time we pass everything to the customer because we, as I say, 60-70% we give price every day. Though the customers are the same, but few customers does the contract for the quarter, few customers buys inquiry to inquiries. So mainly we pass every fluctuation to the customer more or less.
Okay. And apart from the radiator, apart from the core assembly, do you see any other export opportunities going forward? And currently, how much are we exporting and where do we export?
Right now, our export is very less. We are exporting to Canada, we are exporting to Gulf countries, and then we are exporting to Europe. But this radiator plant, what we are building up or what we are making, that we are